Uh, Welcome all. Good afternoon, everyone. I am C. Ayush Gupta, your moderator for the webinar. We are delighted to welcome you all to this webinar, which is organized by the Continuing CP Professional Education Committee of ICI. For all the updates, please block your calendars on Wednesday and Fridays to get insights into various emerging and high-value technical topics. It is my pleasure to be a moderator for the webinar on ISD and its complexities and real catalyst to subsidies, which is the chartered accountants. In a short while, we'll be starting with the session. First, I would like to appraise you about the CPE committee of ICI. The profession of chartered accountancy is growing leaps and bounds, and its phenomenal growth has brought the profession at the forefront. Today, our profession has acquired an indispensable position in the business and economy. ICI continuously aims at developing knowledge edge so that the members stand out to the expectations of the society. To achieve this objective, the CP committee of ICAI has been continuously striving for perfection, integrity, and knowledge, which makes the word chartered accountant synonymous with excellence in service. In this direction, the CPE committee has always been proactive in emerging needs of its members, enabling them to acquire contemporary knowledge and skills to face the challenges effectively by organizing CPE programs and providing adequate opportunities. The program for this evening is as follows. So we have basically two sessions of 1 hour each, and the topics, as I already told you, is ISD and its complexities, and the second would be real catalyst to the subsidies, which is the chartered accountants. Our eminent speakers, CA Vikasji and CA Sonamji, will talk about above mentioned two emerging professional areas. Uh, Maybe now we can, I'll just dive into the introduction of Satish sir, who's the chairman of the CP committee of ICI. Okay. So CA Satish Kumar Gupta ji is presently serving as the chairman of the Continuing Professional Education Committee of Institute of Chartered Accountants of India. In addition to this role, he is also the chairman of the UDIN Directorate and vice chairman of the Committee of Members in Practice, which is CMP, for the current term. He previously served as the council member of ICI from 2019 to 22, during which he held key leadership positions, which includes chairman of the Committee of Corporate Social Responsibility, vice chairman of Direct Tax Committee, vice chairman of Professional Development Committee, and vice chairman of the Committee of Management Accounting. A distinguished figure in the professional community, C. Satish Gupta sir also served as president of the Rajasthan Tax Consultant Association, a premier body of tax professionals for a remarkable decade, which was from 2013 up till 2023. In the past, he held the position of chairman of Jaipur branch of Central India Regional Council, which is CIRC, of ICI, during which the branch was honored with Excellent Branch Award by CIRC, recognizing the outstanding performance under his leadership. CA Satish sir has been the recipient of several prestigious awards, including Best Member of the Year 2004 by the Rajasthan Tax Consultants Association, and the Yuva Pratibha Samman, recognizing his contributions and excellence as a young professional in the year 2002. A prolific speaker and writer, he has authored numerous papers and delivered insightful lectures at various seminars, residential refresher courses, and webinars. His areas of expertise include income tax assessments and reassessments, surveys and searches under the Income Tax Act, soft skills and personal development topics such as goal setting and career planning. With a deep commitment to knowledge dissemination and professional development, C. Satish Kumar sir continues to inspire and empower professionals across the country. So I would request C. Satish sir if you could address this webinar. Yes.
Thank you, dear Ayush. Thanks a lot. Vikas Agrawal ji, Sonam Khandelwal ji, CP team and tech team, and my dear friends who in a very large number are attending this webinar. Welcome to each one of you, and thank you very much for attending this webinar. Friends, I'm really happy that such a large number of members are attending all the webinars conducted by the CPE committee on every Wednesday and Friday. And this is definitely a good thing which is happening in our profession. that our members are committed for the CP programs. Friends, I'm just don't take much of your time because I'm in some personal work and but I'm since request was there from our members that I'm should be here, so I am attending this particular webinar. So I really welcome each one of you. Just to share few things with you that in CP committee we are focused with quality and availability this time, and we are thinking to implement this from this year onwards, the real-time CP credit for all our members. It will definitely increase the quality and for increase the availability. What we are doing, friends, we are just trying to open as many chapters and circles and the groups for CP that will enable us to take the CP programs at our doorstep. I would also like to say something about the union, which we have done in union directorate this year, being the chairman of the union committee. I would like to tell you that we have started that no member would be to generate 51st routine for the tax audit. This is going to be implemented this year onward. And apart from this, we are making union enable to know the name of succeeding auditor for the preceding auditor, so they can recover their pieces if that is not unpaid, or even they can share the technical message in the audit acceptance of the new auditor. These things which we are doing in the union committee, friends. I need your support. We need your suggestions. We need your feedback. And that's all. I don't want to take much of your time. Over to Ayush for the next. Thank you, Ayush. Thanks a lot. Now I would like to use permission for leaving the session. Thanks a lot. Thank you.
Thank you, Satish sir, for the wonderful welcome of all the participants. Uh, so now I will move on to introduce the first speaker, CA Vikas Agarwal sir. So he has been involved as a chartered accountant professional for over 20 years now in the accounts and tax process automation, internal controls, costing, and budgeting implementation. He has been a member of the indirect tax committees of ICI Ahmedabad and the CA Association of Ahmedabad. He has also contributed to various articles of professional association. I would also like to inform that we do have a large group of people joining from across the globe this webinar. We do have almost 585 registrations as of now. So we are addressing a huge number of gathering over here. So over to you, Vikas sir, for the session. Yeah.
Thank you.
Thank
Thank you, Satish sir. Thank you, Ayush. I am first sharing my screen. Is my screen visible?
Yes, sir. Yes, we
Okay.
can see it.
So today, welcome everyone to this session. Thank you for finding our time to listen to me. Today we are going to discuss about input service distributor and its complexities. Before we discuss about ISD, that what is ISD and all about, I like to share one thing, that it is very easy to learn some new thing compared to unlearning something and then learning a new thing. So let's take an example. When service tax law came, it was a complex law. Service tax has never been a simple law, but it was a fun and adventurous journey learning service tax. When I started my career in 2006, service tax law was getting matured, and new services were getting added. And I have witnessed the era when the negative list and inclusive definition of service tax came. Then came the GST law. Now the biggest challenge in the GST law was that you have to unlearn the old law, erstwhile law, and learn the new things. The same thing is happening with ISD. Now that the GST is a 8 years old child, I'll say that when ISD is not a new thing, when we all have witnessed the advanced ruling of in the case of this Asia, Columbia Asia Hospital, from lot of DGGI cases related to ISD and cross charge. Now that the GST Council agreeing that ISD was not mandatory, making amendment and making it mandatory effective for 1st April 2025. So it is a it's a challenge for all of us to unlearn this whatever has happened in during these 8 years and learn ISD once again. So with this, let us move this to this session and let us see what is ISD is all about. So first of all, what is ISD? All of us know what is ISD. I'll just quick run through these slides very quickly so that those who are not aware about basics of ISD, they can know. So ISD stands for Input Service Distributor. This simply there are if there are many businesses, if there are multiple GST registrations in the same PAN, sharing the same PAN, means multiple GST registration has been taken against the same PAN. Those all are distinct person. So if any business is having any such two registration, GST registration, then that business is required to obtain ISD registration. This business may avail many services. The business which are common at entity level, like HR services, IT services. IT services can be hardware related services, software related services, supply chain consultancy, legal, professional, audit, banking services. These all are services which are taken at entity level. It cannot be said these services cannot be linked to any particular GST registration. These kind of services are generally taken at entity level. So ISD is a mechanism for distributing of input tax credit on these common services. So when any service is taken at a organization level and the beneficiary of which is more than one GST registration, the question arises that how much is the share of ITC for which GST registration? So my friends, input service distributor means ISD is that mechanism which is for the distribution of ITC of GST paid on these common services across various GSTIN, that is all the district persons which are beneficiary of these common services. Now, before we discuss more details about ISD, let us also discuss what is cross charge. Because when we are discussing about ISD, it cannot happen that a thought about cross charge doesn't come into our mind. Because all these 8 years, all the taxpayers has been using cross charge as an alternate of ISD. So it is important that we understand what is the difference between ISD and cross charge. So we just now we learned that ISD is just a mechanism to distribute input tax credit on common services. It is neither an input service per se nor an output service. Whereas cross charge, where ISD is just for distribution of ITC on common inward supply of services to distinct person, cross charge itself is outward supply. When you are making a cross charge, you are actually affecting outward supply either for a good or for a service. Example of goods can be stock transfer. So like transferring stock from Maharashtra to Gujarat or Maharashtra to Kerala. So it is a stock transfer. So though the inventory is not transferred from one entity to another, it is just transferred from one pocket to another. Yet, for the purpose of GST law, since Maharashtra and Kerala are two distinct persons, hence it is called stock transfer on which GST is payable on transfer value, considering it as a deemed supply. Likewise, example of cross charge in case of service can be management services. So thus it is very clear that ISD is for just a mechanism for appropriation of ITC on common input services. It is neither a input service per se nor output service. Whereas cross charge itself is outward supply, and it is for the purpose of discharging GST on such outward supply of goods and services. Now, when we have learned the difference between cost charge and ISD, let us also understand that can cross charge be used instead of ISD? Though ISD mechanism existed since beginning, that is 1st July 2017 itself, it was not mandatory earlier, as accepted by the GST Council in 52nd GST Council meeting also, and later on amendments have been made. Thus, after this confirmation, it became clear that taxpayer could adopt cross charge as an alternate to ISD. And once this was done, all those cases pending with DGGI are now defunct, and DGGI cannot proceed with the cases where they have raised objection on any taxpayer for either opting for ISD or for opting for cross charge. So it is very clear that up to 31st March 2025, cross charge could be used as an alternative for ISD. But effective from 1st April 2025, ISD has become mandatory. So it means cross charge is no more an alternative to ISD. Now, there then what about the ISD not followed in past? A question arises that what about those taxpayers who have not followed ISD in past? That is for the period up to 31st March 2025. So many taxpayers who have taken ISD process lightly had rightly availed common ITC till now. The question arises that if they have taken common ITC and they have distributed such common ITC through cross charge, or they have not done ISDA, neither ISD nor cross charge at all. In that case, whether the ITC availed by them is correct. So whether this amendment, which is effective from 1st April 2025, whether it ratifies the past events, so it means that following ISD scheme was not mandatory for distribution. The amendment is effective from 1st April 2025, which means that past events are not ratified. ISD scheme was not mandatory for distribution. It doesn't mean that distribution itself was not mandatory. What When the GST Council had clarified that ISD scheme was not mandatory, that it means that the process of ISD was not mandatory. It doesn't mean that common ITC could be taken by HO and entire ITC could be retained by HO. Thus, if any taxpayer up to 31st March 25, if any taxpayer has followed the process of cross charge, then it is fine, especially in the background of Rule 28, second proviso to Rule 28, which specifically says that if recipient of supply is entitled for ITC, full ITC, then any value adopted by the supplier is acceptable. However, what about those taxpayers who have neither done ISD nor done cross charge? For them, there is a big question mark. They are still into the gray area, and the department may anytime approach them and they may face consequences. For them, they can still do cross charge because there is time limit for availing ITC. But then once they have already availed ITC in past, there is no time limit for cross charge. They may have to pay a minor amount of interest, but if they have not already done cross charge up to the period of 31st March 2025, then before the department approaches them, they must do cross charge and rectify this mistake and do the necessary compliance and fill the gap. Many taxpayer has not followed ISD process. So this I have already explained when I was explaining the earlier slide. So prior to amendment, adopting ISD scheme was not mandatory, but it doesn't mean that HO could keep entire common ITC. Distribution, cross charge, or reversal was mandatory. So I repeat, if any of your client, or if you have availed common ITC up to 31st March 2025, but who you have neither followed ISD nor followed cross charge and not even reversed the ITC pertaining to the turnover which is not related to the state wherein common ITC is taken, then the compliance must be done, and the best way would be to do a cross charge with respect to that period now, so that whenever the department come in future, you are in a position to justify that yes, the cross charge has already been done, and which is, and the value, which whatever value may adopt for the same, that is, if the recipient location is entitled for full ITC, it may not be questioned by the department considering second proviso to Rule 28. Now, there are many myths about ISD. What are those myths? Let us understand. The one very important myth is My clients are small clients. ISD is not for my clients. My friends, it is one of the biggest myth because ये बहुत बड़ी sorry, it is a very big myth because ISD is applicable even if there are only two GST registration against same PAN. Now let's take example. It can be a small client also. How? ISD is applicable even if there are two GST registration, even in the same state also. Examples, transporters. There are transporters. Most of the transporters are having two GST registration. One for carrying RCM supply, one for carrying forward supplies. So thus ISD become mandatory for them. Another example is having another example of taxpayers having business with regular GST registration and SEZ GST registration that can be in the same state, but still, since there are two GST registration, ISD becomes mandatory. So ISD is applicable even if there are two GST registration, and that can be in same state also. Now, when I was explaining this, a question may arise in your mind that why transporter? In case of transporter, why one GST is for RCM, in which the transporter is not entitled for any ITC? Then what is the need of ISD? So, my friends, in that case, the need of ITC is become ISD is there because with in the context of the new ISD regime, it is mandatory that if you distribute even ineligible ITC, and that ineligible ITC has to be availed by the recipient location and reverse in the GSTR 3B return. Now, a question may arise whether this procedural requirement can force one person to take ISD registration just to surrender the entire credit. Well, that comes into gray area, but in order to avoid any compliance issue, in order to avoid any notice from the revenue from the department, I'll recommend that ISD registration is taken and necessary compliance is done. Now, what is to be done once ISD is applicable? The first step is to obtain ISD registration. The second, now that you have taken the ISD registration, what next? The question arises, which location? ISD registration has to be taken for which location, or it may be taken for which location. So, my friends, it is not necessary that ISD registration is taken for registered office. ISD registration can be taken for any location, and it need not be the registered office or the head office of any business. I you can once you take the registration, ISD registration for any of the GST registered location. Yes, it is important that ISD registration is taken in any state where a business is already having a regular registration. Otherwise, if the regular registration is not there, there arises no question of taking ISD registration. Now, when you have taken the ISD registration, what next? The most important thing is that you prepare a necessary framework and the SOPs which are required to undertake ISD compliances. And most another important thing is that once you have the necessary SOPs and necessary framework in place, the same must be aligned with your ERP or the accounting system. Now, what is your ISD framework? What can be said to be a ISD framework? While preparing a ISD framework, what things must be kept in mind? The first step is identify common services. What are your common services? That needs to be identified. For example, I'm sharing some example. HR services. When you take any HR consulting services, these are common services. However, there can be certain services which can be common for certain organization and which may not be common for another organization. For example, few other HR services, recruitments and trainings. Now, suppose for recruitment, you take subscription of Naukri.com. It is a common service. But suppose if you are paying to HR consultant, then in that case, it can be a department wise, department specific service, and your organization may take a call that it is a specific service, it is a location specific service. Likewise for training also. Now, IT. In case of IT, most of the organizations hire servers, printers, ERP services. A use cost is paid for ERP services. These all services are used at entity level, organization level. So beyond doubt, these are common services. However, in case of IT services itself, hiring of laptop may be specific service for certain organization because the location of laptops are known, and accordingly you may ask your service provider to bill accordingly to different states. However, it may also be considered as common services by certain organizations. So there are other services also: legal, professional, financial, auditing, supply chain consulting, which can be common services and which may also be specific services in certain cases. Like for example, professional service. Suppose if a business identifies, observes that there are some irregularity in a particular state, and they hire a professional agency for carrying out internal audit of that particular state, then it becomes a location specific service. Likewise, supply chain consulting. Suppose a business organization is having presence in almost every state in the country. They are registered in almost 30 states or union territories, but they identify that a particular state, in the state of Kerala, they are having certain challenges in managing supply chain, for which they hire a supply chain consultant. In that case, that service would be specific to Kerala state, and the ITC will be availed in Kerala state. So one need to identify the beneficial location, and based on which ISD framework will work, ISD distribution framework will work. However, it is not so easy as it appears. Identify beneficiary GSTINs. Once you identify the common services, another step is to identify those locations which are the beneficiary of such services. Now, ISD is relevant GSTN wise. Mind you, I in my last slide I was also using the word states and location. However, there may be a situation that you may have multiple GST registration, multiple regular or SEZ GST registration in a single state, and in that case, the ISD would be relevant GSTN wise and not state wise and location wise. There can be multiple GSTIN within same state, as I shared the example of transporter and SEZ registrations. Mapping of each identified common service must be done with each identified beneficiary location. And to avoid manual working, this entire framework must be synchronized in your ERP and accounting system. Friends, whether multiple ISD is required. Before coming to this, I'll share one interesting aspect of this. It is very difficult to identify the beneficiary location before using the service, because let's say if supply chain team is requiring certain services related to supply chain, they are hiring any supply chain consultant, then those users who are creating the purchase order, they are not so much aware of GST law, they are not an expert of GST. For them it is very difficult to identify that the services are to be used by which location, and most of the organization faces this challenge. The user creates a PO, and at that time, in the PO the user need to mention the recipient's GST number, and it becomes a challenge. In case of services, it becomes a challenge. At that time it is very difficult for that user to know that the service has to be availed by a particular regular GSTIN, or it has to be taken in ISD for distribution. As a solution to this, we generally advise to many of our clients that it is better that you take all your services, you create all your service POs for ISD registration only, so that your users are free from this dilemma. The advantage of this is they, you can avoid error. Suppose if any regular GST service is to any PO for regular service is issued from ISD location or vice versa, then it is a very difficult task to later on ask the supplier to again change the invoice. But if you issue all the service PO from ISD location, then at least at a later point of time you can easily distribute the credit to the relevant location. If any service is specifically related to any GSTIN, that can also be distributed by the ISD registration to that particular GSTIN. There is no restriction that any specific service cannot be distributed through ISD. So this way you can reduce the hustle of purchase department or store department or various user department who are not aware that which GST number is to be used while issuing a service PO. Next is whether multiple ISD is required. We recently met one PSU and came to know that they are applying for 5 different ISD registration. When we asked them that what is the purpose behind doing this, then they said that various common services are procured from various different location, and their accounting system doesn't support that such services can be booked from a single location. And because of the restriction in their accounting system, they are bound to apply for 5 ISD registration. In fact, they had approached us with this query only, that whether multiple ISD registration can be taken or not. Well, where there is no such restriction in the GST law, we were amused that why at all there was such need. And that is why when we inquired with them, we came to know that if your accounting system doesn't support such a kind of accounting wherein common services procured from 2 different locations can be booked at a single location, then you may also have to take multiple ISD registration. So these all are the complexities related to ISD. I hope you all are taking note of all these complex points so that you can discuss with your client at the time of ISD implementation, if not implemented yet. Regional, another one example is regional offices are availing common services. So like I'll give one example of a multinational company for which we implemented ISD already in the month of March. they were they were having 3 regional offices: south, north, and east. For west, they did not have any regional office because the HO itself was taking care of western region. So they were availing common services at HO, which is located in Mumbai, at Bangalore, which is looking after the entire southern region, at Gurgaon, which is looking after the entire north region, and at Kolkata, which is looking after the entire east region. So there also some challenges where we face certain challenges, and however, there was no need of taking multiple ISD because we suggested the client, and the client made necessary changes in their accounting system so that the common services taken in Gurgaon, I mean south, north, and eastern region can also be booked at HO and can be routed through the ISD taken at HO. So the question whether each regional office requires separate ISD registration, I already mentioned no separate registration required. But yes, answer to this depends on your accounting system. And one more thing, not only the accounting system, the answer to this depends on one more thing: GST compliance. And what is it? Let us look at it. GST department is not clear about scrutiny of ITC received from ISD registration. And this is not a new point, my friend. You all might be aware of it because some of your clients may already be following ISD, and this music you might already be facing. So what is happening that ISD is availed on ISD ITC in case of ISD is availed on the basis of an invoice issued by ISD to regular registrations, and such invoice is issued as per section 17 read with rules 36 sub rule 1 clause E. However, the GST officer can't. There are plethora of cases where recipient GST is asked to submit description HSN-wise summary of ITC, and copy of source invoices for scrutiny. So it means, let's say, if you are having 10 regular registration and one ISD, then ISD is always subject to scrutiny by the GST officer. In addition, the other 10 location GST officer, they are also asking you that please share the description and HSN wise details of the ITC which is disputed along with copy of source invoices. Now, what is happening? Thus, GST and officer is pushing the taxpayers to scrutinize beyond their scope, and their scope is limited to the scrutiny of ISD's invoice. Now, this is a practical difficulty and it is not expected to settle down very soon. And practically, I don't foresee that CBIC may issue clarification very soon on this, because until CBIC is assured clear about the tax implications, they will never come up with any clarity for from the taxpayer's perspective only. So thus taking multiple ISD registration will not only increase your administrative work, it may increase your compliance work also. So it would also further complicates your departmental review perspective also, from the departmental review perspective also. So we suggest that if at all, if there is any accounting restriction due to which your client is not able to book a common service availed at any other location at the HO, then necessary changes is made in the accounting system instead of taking multiple ISD registration. Now, what about ineligible ITC? What about ineligible ITC? Now, earlier, before up to 31st March 2025, that is before amendment, there was no need to distribute the ineligible ITC. But now the law mandates that you have to distribute ineligible ITC also. Whatever ITC is received in your ISD registration, the entire ITC has to be distributed. Now, let's say if any ITC which is restricted, let's say a R&D center, R&D center may be said to be a common activity, and a construction of R&D center is made, then ITC related to such construction is not entitled for ITC. It is not eligible for ITC. So the ITC location, ISD GSTIN will have to avail such ITC and distribute to all distinct person, and such distinct person will have to reverse their share of ITC which is received from the ISD registration. So thus it is not an option that ineligible ITC is not distributed. It has to be distributed, and again it has to be accepted by the recipient GSTIN, which is a regular GSTIN, availed and then reversed through their GSTR 3B return. Common services under RCM. Now another question arises that what has to be done for common services? Till now, there was no clarity for common services covered under RCM. For RCM, the location which was making payment of GST was availing the entire ITC, and it was not disputed. Now that RCM common services falling under RCM is also made subjected to the ISD distribution, it is important that we understand that what is the methodology to be adopted. The first thing is the first thing is ISD liability discharging RCM liability. But the question arises, can ISD registration discharge GST liability? And ISD registration cannot discharge the GST liability. Then what has to be done? The RCM liability must be discharged by the regular GSTIN, regular GST registration in the state, in the same state where ISD registration is taken. So let's say example, if your client has taken ISD registration is West Bengal, then West Bengal's regular GST registration must discharge the RCM liability. Now, once the RCM liability is discharged, West Bengal registration will take credit or same of same, and regular West Bengal's regular GST registration will take ITC of same, and the regular GSTIN will transfer the same that ITC to ISD GSTIN through an invoice which carry reference of the original vendor's invoice. Thus, the sequence is first the regular GST number will make payment of GST. The same regular GST number will avail ITC of the GST so paid in cash, and then once ITC is availed, regular GST number will pass on the same ITC to ISD through an invoice, and then ISD can claim such ITC and distribute to other distinct person as if the ISD would be doing with ITC received from any external vendor. Now, question next is cross charge required yet? Before coming to this, I'll also like to emphasize that, friends, many of us are also having a myth that in case of ISD registration, there is no need of ITC reconciliation. Let me make it very clear. If you are thinking so, you are absolutely mistaken. ISD registration is not a regular registration, but the ITC reconciliation must be done on a monthly basis as if you are doing for a regular registration. Why? The question arises why. You may be thinking why. Okay, let us come to it. What happens in a case of regular registration? We procure goods and services, we book in the books of accounts, and sometime what happens? Sometime it may so happen that we have booked the goods and invoice for goods and services in our accounts, but the same has not been uploaded by the vendor, or for any technical glitch, or it is not appearing in the GST portal, and thus that item goes to a monthly reconciliation MIS sheet. Likewise, it may also happen that a supplier for goods or services have uploaded certain invoice on the GST portal, which is appearing in your GSTR 2B, but your accounts is not showing that invoice because that invoice is not booked yet, and hence it again becomes a reconciliation item. So, my friends, in case of ISD also, the same is going to happen. You there may be invoices which you have booked in your accounts, but your vendor, yes, it in the present case it would not be for goods, it would be only for services, but it may so happen that you have booked invoices for services in your books of accounts, but the same has not been uploaded by your supplier, and thus it is not appearing in on the GST portal in GST registration of your ISD. Likewise, it may also happen that there are invoices which are appearing in ISD registration on the GST portal, but it is not in your books of accounts. And mind you, my friends, even if any invoice is appearing in your on the GST portal for your ISD registration, you cannot distribute it if it is not in your books of accounts. Now, another question arises. Now that ISD has become a mandatory process, is cross charge required yet? Now, when whether cross charge is required has no relation with ISD. Yes, my friends, mind you, cross charge never had any relation with ISD. It was the taxpayers who were using cross charge as an alternative for their convenience. Otherwise, cross charge has no relation with ISD. Cross charge may still be required and it may still be mandatory for you for the outward supply of services among distinct persons. Now you may be thinking that outward supply of goods may be there to distinct person, which is like, for example, stock transfer. But what could be outward supply of services to distinct person, right? So let us see. ISD covers common services among distinct person, not with related person. So with respect to common services shared with related person, cross charge is still mandatory compliance. Yes, for example, your client or you are having multiple companies or multiple businesses having different PAN, and those are managed from same office, or a same management team is handling all these businesses. So in this case, rental services, management services, or various other services are shared by these companies, and the payment of these services are made by a single entity. So by that single entity to the other related parties, cross charge become mandatory. And even with respect to certain activities between distinct person also, cross charge may still be mandatory. And what are those services? Like for example, hiring of asset in Gujarat's book that is availed by Gujarat, ITC availed by Gujarat to a contractee situated in Rajasthan and served by Rajasthan state. I'll give you an example to this. You may not be able to foresee an example. I'll give you a practical example. Let's say your client is a contractor which provides heavy equipments, heavy machineries and equipments on rental basis or a lease basis. These are specific kind of equipments or machineries which like for example earth moving equipments. So your client is providing earth moving equipments on hire. So your client is situated in Gujarat, Maharashtra, Rajasthan, and few states where they are doing business on a regular basis. Now your client is having a particular machinery in books of Gujarat. So again, let me make it clear. Your client is a single company. This all distinct person in Maharashtra, Gujarat, Rajasthan, or Karnataka. These all are under same company. So they are not different. The machinery is owned by company, not by Gujarat. But when I say Gujarat books, what I mean to say is ITC on that equipment has been availed by Gujarat. So in that context, it is standing in Gujarat's GST book. So now that machinery is standing in Gujarat's GST book as ITC was availed in Gujarat. Now your client got a contract from ONGC Rajasthan for some sort of work, maybe either hiring or maybe even earth moving activities, which is to be performed in Rajasthan. And this contract is also handled by Rajasthan state. So in this case, entire billing to ONGC will be made by Rajasthan state. But this equipment, which is standing in Gujarat's book, is also used. In this case, there would be a deemed supply by Gujarat to Rajasthan state. So this for this deemed supply, there would be a cross charge by Gujarat to Rajasthan. However, it is beyond doubt now that cross charge is not required with respect to following activities. These are salary, common salary to HO's employee or any employee. Salary, there is no need to do any cross charge on salary cost, depreciation, infrastructure cost, rental cost, finance expenses, etc. Now, let us discuss about some other challenges associated with ISD mechanism. What are these challenges? One challenge is multiple permutation and combination. As I already explained to you, there can be a situation that certain services are common to entity level. Let's say if you are having 10 locations, your client is registered in different locations and having 10 GST registration, there can be certain services which may be common to 10. Then may be certain services which is specific to certain location, and there may be certain services which may be common to either two location or three location or four location, as I gave you example of regional services. So administratively it is a very complex task, very difficult task to manage, to identify this location and to distribute the credit. Now, another one complexity is ITC to SEZ. There is no option of without GST, because when the ITC is distributed to SEZ, the company has already paid GST. And now, when this ITC is distributed to SEZ location, it is going to accumulate. Another difficulty is determining host and user locations before supply. As I mentioned to you, that it is very for the user who are creating PO, it becomes a challenge for them to determine that such service is specific to any GST registration or it is common service. And thus, sometimes user may even provide incorrect GST registration also, and as a result of which you will be running behind pillar to post asking your supplier to make correction. So to save from this, You may create a policy that for all the services, you will create service POs only with ISD registration. And later on, if any service, if any ITC is specific to any GST registration, then even though it is such ITCs taken by ISD, it can be distributed to that particular GST registration also, and there is no restriction that once a credit is taken by ISD, it has to be distributed to all location only. It is not like that. It can be distributed to a particular location also if it is location specific. If it is related to location specific service. Accumulation issue. If you fail to comply on monthly basis, which is not an option, the law compels that you have to distribute on a monthly basis, but still if you fail to comply on a monthly basis, then there is an accumulation issue at branches. Imagine that what is happening. These all expenses on which you are distributing ITC through ISD mechanism, all these expenses are already part of transfer price while doing stock transfer. This all services are loaded in the transfer price as an overhead. So thus you have already charged GST on those overheads, and thus there is a duplicate charge of GST, and the recipient location has paid GST twice, and they are bound to they are bound to pay GST twice and avail ITC twice. I hope I am clear. What I mean to say, I repeat it. Let's say, for example, there is a manufacturing. Okay, we have a dedicated slide for this point. I'll explain this later to you. Another is distribution to SEZ. SEZ I already explained to you. Duplicate distribution. I am on the same point. Let's say your client is a manufacturing company which is having centralized manufacturing facility in one or two states. So what happens that except these one or two states, all the other states are trading states only, wherein they receive the stock transfer and sell it to end user. So they get stock transfer, they get ITC on stock transfer, and in turn, when they sell it to B2B or B2C clients, then at that time they use that ITC on stock transfer against the GST liability which they have to settle on their supplies, outward supplies. Now, what is happening? When these manufactured goods are transferred to different states as a stock transfer, at that time, the transfer price which is used for discharging GST on deemed outward supply, that transfer price already includes all common services. And thus, the transferor location has already charged GST on all common services, and the recipient location has already taken ITC of all ITC on all these common services. And once again, when you are doing the ITC distribution on the same services through ISD, then what happens that ITC on these common services is transferred twice to the recipient location. So what is the solution to this? The solution to this is that the solution to this is you have to rework your transfer price. You have to again rework your transfer price and remove these overheads which are representing the common ITC on which you are bound to do ITC distribution through ISD. I have kept one example also here with reference to state's name. I'll go through this. Let's say, for example, what Okay, no, sorry. This is a different example. What if ISD makes a mistake while distributing ITC? I hope the earlier one is clear to you. The solution to that is that you rework your transfer price and remove the element of common services, the value of common services from your transfer price, because on the common services, you are already going to distribute the ITC. Now, What if ISD makes a mistake while distributing the ITC? You must pay attention to this. It is very important. This one is very important. Let's say if you have distributed excess ITC to state A and short ITC to state B, what happens? By the time this error is identified and ISD issues debit note, credit note for the correction, what has happened? State B has already made cash payment towards differential liability. So ISD has transferred less ITC to state B. So since state B received less ITC, definitely there was some cash liability when state B had sold those goods to B2B or B2C customers. And at that time, for the differential GST liability, state B has already made cash payment. Now what happens? After correction, state B receives additional ITC through debit note, but no scope of utilization as cash has already been paid by state B. Mind you, these all trading locations, they are having a very small margin because the transfer they are not having margin of more than 7 to 10%. So if any cash payment is already made and later on additional ITC is received, there would be very less scope of utilization of such additional ITC. So these are very practical challenges associated with ISD, because ISD, as I referred, it is a computation based compliance, procedural compliance and computation based compliance, and these errors are bound to happen. Another thing, in the same example, let's say state A had also utilized full ITC received from ISD. State A had received more ITC, and what happened? State A had utilized the entire ITC, even the excess portion also. Later, when ISD registration has made the correction, ISD issued credit note to state A for rectifying its mistake. Whether state A is liable for payment of interest, because state A has already used such ITC. So technically, there shall not be any interest liability. But these all are unanswered questions. The law remains silent on same. Now, there is one jurisdiction related thing. As I already mentioned, the departmental officer, or what departmental officer are doing, they are having no clarity about the scope. They are asking the taxpayer to for a description and HSN by details of input tax credit along with the invoices. In one real case of a taxpayer, jurisdictional officer of state A observed that ITC was distributed based on wrong turnover, and thus excess ITC was distributed to state A, which was distributed by that state officer. Similar finding in case of same taxpayer by state B, but there was short ITC in case of state B. So there was no dispute in state B, but tax officer of state B sent this information to the state where ISD registration was taken. Now, the jurisdictional officer of ISD GSTIN came, made necessary scrutiny, and asked State C for making correction. Based on this, State C identified the error and made necessary correction. They issued credit note to State A. Now, the interesting thing is, by now, officer of State A had already issued SCN and order to the taxpayer for that additional ITC amount, which was extra ITC distributed to state A due to formula error, wrong turnover. Now, on one hand, the taxpayer in state A is bound to surrender such ITC, excess ITC in state A immediately. On other hand, the same taxpayer in the same state A is required to file an unwanted appeal. So, my friends, humans are bound to make mistake. What I'll suggest you that ISD is a procedural and calculation based compliance which is highly prone to errors. When there are calculations, error are bound to happen. You cannot control. You may howsoever strong mechanism, SOP and framework you may have. Suppose if there is any error in turnover, then error is bound to happen. So cost of such error is very high. So we strongly recommend that a strong SOP and accounting system is developed in your client's accounting system to avoid this kind of error, so that this multiple disputes can be avoided, and unwanted notices and litigations may be avoided. With this, I conclude my presentation. Thank you very much for listening to me. You may contact me at this mobile number and email ID in case you have any doubt. Thank you very much.
Thank you, Vikas sir, for such a wonderful session. I guess it was very, very insightful, and you had a very, very detailed content on what challenges taxpayers are facing in terms of the ISD
Thank
and
you.
how you can take care of all the ISD related compliance. So it was a very, very insightful session. Thank you so much for that.
Thank you very
Sir,
much.
we do have a certain questions from the members. I'll just start taking up those questions if you are okay with that.
Yeah, I'm okay with that.
Okay, okay. I will start with the questions. So we have first question from Rustab from Mumbai. If we
Yeah.
are able to identify the consumption of the expenses and ask vendors to directly raise invoice on the concerned state, then can we avoid these complications? Obviously, for few expenses like audit fees, website development charges, and such other common expenses, ISD mechanism will have to be used, but at least we'll be able to bring down the complications substantially. Your thoughts?
Yes, if any expense can be identified as specific expenses, then you can certainly ask the vendor to raise invoice for such expenses at that particular location. However, practically this is not so easy, as per our experience while implementing ISD in various organizations.
Okay, Rushabh, I hope that answers your question. Going
In
ahead,
case,
we have,
in case
yeah,
it doesn't answer, Rishabh, you may write your query to CP committee on the email ID. Ayush, we can tackle it later on
sure,
also.
sure, yes, yes, sir, for sure. Then we have next question from Naresh from Bangalore. Which turnover is to be considered for ITC distribution between the states? Is it from GSTR 3B, 1, or audited financial statements?
Nareshji, the turnover as per your 3B return.
Okay, going ahead, we have a question from Umeshji from Jaipur. What is the resort to the situation facing under ISD in the following case? A company running from Jaipur centralized location, but have warehouses in multiple states for supply to its pure agents in that state. The pure agent supplies such goods to ultimate consumer, then only actual turnover in terms of income tax is recorded in the books of accounts. Would commission be paid to such
Can you come
location?
slowly, please?
Yeah, I'll read again. A company running from Jaipur, centralized location, but have warehouses in multiple states for supplies to its pure agents in those respective states. The pure agents supply these goods to ultimate consumers. Then only actual turnover in terms of income tax is recorded in the books of accounts. Would
Okay.
commission be paid to such agents?
I think the facts are not
Uh,
complete
I,
in this
I
question.
I am also sensing that the facts of the
Hmm.
question are not too clear. Maybe Umeshji, you can mail your question to the CP committee and we'll get back to you on that. Uh, Next, we have a question from Chayank from Bangalore. What will be the distribution criteria for expenses incurred by head office, such as rent, house rent of HO employees, when the branches are not eligible for full ITC?
Uh, Rent and house, okay,
House
rent
rent
of
of HO employees.
HO employees and house rent of employees. I don't think it is required to distribute rent of HO and house rent. It is not required to distribute. It's not a common credit. It's used by your HO. I mean, it again, yes, it is a gray area. There are set of people who are considering it as a common service, but in my view, it is not a common service. But still, if you want to distribute, his question is turnover, right?
Uh, no, the question is around the just around the house rent of employees
It is
HO.
not required to distribute. It is not required.
Okay, moving along. We have a question from Prachi from Delhi. Can ISD issue consolidated invoice for all the services to each branch or invoice-wise mapping is required? Maybe expense-wise mapping is required, is
No.
what.
Invoice-wise mapping is required, but invoice can be issued consolidated. Like suppose, sorry, ISD has received 100 invoices. So there is no need to issue 100 invoices. A single invoice can be issued, but mapping is required with 100 invoices. So, matlab, there can be a back-to-back working. Yeah, but in for eligible ITC and ineligible ITC, for these two, separate invoice has to be there.
Okay, I hope that your question gets answered there. Then we have a question from Priyanka from Delhi. How
Yeah.
to distribute ITC where new registration, new GST registration taken in the current year? How to split it in all registered GSTNs?
How to distribute new
How to split all the registered GSTNs? So basically, I'll
turnover?
tell the question.
Okay,
Mhm.
it's turnover wise.
Okay, but I guess she's asking that if there's a new registration in the current year, so how does that get bifurcated to that
So
particular registration?
when the registration is taken, after that, that turnover will be added, because when that registration did not exist, there arise no question of distribution for that period. And during the period when it came into existence, so there is no. So, okay, let me give you an example. If a new registration is taken on say 20th, mid of the month, there's no concept of proportionate turnover that the turnover of 10 days has to be extrapolated, or like there's nothing like that. Whatever turnover is that for this 10 days has to be considered as such.
Okay. Moving along, we have a question from Anshul from Rohini. In case of the RCM, the turnover of regular register. Oh, sorry. This is not a question. This is, I guess. Okay. Then we have a question from Rakeshji from Delhi. Can forward charge ITCV? Can forward charge ITCV distributed under Rule 54(1)(a) as the supplier has not issued the invoice on IST GSTN, but issued on regular GSTN? Also, is it mandatory to distribute the ITC by ISD in same month?
It is, see, the law says that you have to distribute the same month. But in my view, what if you don't distribute? There's no loss to the revenue. So you can distribute in the next month also. If suppose if someone fails to distribute in the same month, it doesn't mean that it expires. In any way, the law there is no loss to the revenue. But yes, the first question that the supplier has issued the invoice to regular GST number, that is issue. I think there is a case of Siemens Limited, but then again, for a single invoice, I will not recommend that, because these all case laws and all, what happens now that if there is amount is big, and if it has already happened, then you may approach the courts. But if it is if you can ask the supplier to do correction, that would be more appropriate. That would be more
Okay.
appropriate because yeah.
Okay. I hope Rakeshji that answers your question. Then we have a question from Thondamala from Hyderabad. Is there any possibility by government to amend the law or facilitate, maybe by a separate option, for ISD registration through which RCM payments can be done in future instead of the regular registration? I mean, any suggestion from GST and Council to the government on this?
uh, if whatever suggestion is there, I mean, you are open to write to the GST Council and even the ICI Indirect Tax Committee, and let the office bearer take a call, because we cannot predict that what amendment government may make and what not.
Yeah, correct. Okay. Going ahead, we have a question from Viren from Ahmedabad. What about accounting mechanism? Is there a need to maintain separate books of accounts for ISD? Am I audible? I guess because sir, your internet got interrupted. Sonam ji, am I audible? I guess can you moving? Okay.
Yes, Ayush.
Okay. I guess there's some issue at because he's in. We do have a couple of more questions on the ISD topic. Uh, but I guess in the interest of time, maybe we can start with the next session, and all the questions, the rest of the questions can be addressed by the committee separately, the CP committee. Okay. Uh, so quickly moving along, we have CS Sonam Khandelwalji. She is a visionary chartered accountant with over 13 years of experience in the government subsidies, project financing, business
Yeah,
consulting,
sorry,
and other.
there was
Yeah,
some technical glitch and I got dropped. What was the question?
no problem, Vikazi. I'll just reiterate. Just 1 second. Okay. Uh, what about the accounting mechanism? Is there a need to maintain separate books of accounts of ISD?
No separate books of accounts.
Okay. Then we have another question from Sayali from Sindhudar. In case of
Wait.
ITC,
To last question, no separate books of accounts, but it is always recommended that separate ledgers are maintained for ITC in with ISD ledger and for distribution. Separate ledgers must be maintained.
okay, okay, I guess Virendra, your question has been answered. Then we have a question from Sayali. In case of ITC correction to the cash payment was done in a particular month, can the ITC be utilized in the next month if it is in the same financial year?
Come again, please.
In case of an ITC correction through the cash payment was done in the
Correction of
particular
what?
month.
The facts are not clear.
Yeah, that is what I also understand. Sir, if you can maybe mail this question to the CP committee, we can help you with this question. Uh, then going ahead, we have a question from Sanat from Gujarat. Multiple ISP registration because of some issues in accounting. Can you provide example, if possible, related to such issues?
Multiple.
Multiple ISD registration because of some issue in accounting. Can you provide an example, if possible, related to such issues? Like
There
how
is no
this can be
there is
resolved?
no restriction in the law. You may take multiple ISD registration, but at the end, see, handling one ISD registration is so much difficult. See, you have to do necessary changes in your accounts and all. So what happens? As I mentioned that recently, one of the PSU approached us, and they are taking five ISD registration. What happens is that for handling ISD registration is administratively a very tough task, and there is no restriction in the law. What will happen if you are taking multiple ISD registration? Your compliance burden will increase unnecessary.
Correct. Yeah. Okay. Moving along,
Like all this
we have
identifying the services, identifying the location, then mapping in your ERP accounting system. All this you'll have to do multiple times, so it will complicate your accounting system. Nothing else. Now you are creating separate ledger for ISD. So separate ledger for ISD 2, separate ledger for ISD 3. No, too much complicated thing.
yeah. Okay. Uh, then we have a question from Ashok from Nagpur.
Yeah.
Obtaining all the regular invoices from vendor against ISD GSTN, is it really advisable given the delay involved in the distribution of ISD ITC to normal GSTN?
Sorry, come again.
Obtaining all the regular invoices from vendor against ISD GSTIN, is it really
Regular invoices
advisable?
from GSTN.
Yeah. Is it really advisable given the delay invoice involved in the distribution of ISD ITC to normal GSTN? So if I guess I'll rephrase the question here. 1 second. So if you're obtaining all the regular invoices from vendor against ISD in the ISD registration itself,
Uh-huh.
is it really advisable given the delay that is involved in the distribution of ISD ITC to the normal GSTN? So I guess what he's asking is that
Is asking if is it okay if there is some delay, right?
yeah.
So
Yeah.
we already discussed this. There is no harm.
Correct. Yeah. Okay.
In
Another
fact,
question from
if there is a delay, what happens? ISD is applicable most of the time when you are distributing ITC, na, then you are dealing with trading states. Trading states whose margin is very low. So if there is a delay, in that case, what will happen? That state will be paying cash against the ITC which you are yet to distribute. So this will lead to accumulation in those states. So ideally, delay hona nahi chahiye.
okay.
I guess in the interest of time, we'll have to move to the next
Sure.
session with Sona ma'am.
Sure. Yes. So for the participants whose questions have not been answered, maybe the CP committee can take those up separately. Thank you so much, Vikasji,
Thank you.
for answering all the
Thank you so
questions.
much, sir.
I'll love to respond to that. You can send to me over email.
Sure. Yes, we'll do that.
Thank you. Thank you, CP committee, for the opportunity. Thank you, everyone, for listening to me. Thank you very
Thank
much.
you so much, sir.
Thank you. Okay, in the interest of time, I'll quickly introduce CS Sonam Khandelwal ji. So she is a visionary chartered accountant with over 13 years of experience in government subsidies, project financing, and business consulting related areas. She has won multiple awards like Corporate Diva Award in 2016 for her outstanding business leadership, National Women Entrepreneur Award in 2019 for her contribution to MSME finance, and Women Entrepreneurship and Women Achievers Award in 2025 for being a change maker in finance and empowerment. Over to you, Sunamji, for the set.
Thank you, CP committee. Thank you, Satish sir, and thank you, Ayush. Myself, C. Sonam Khandelwal. So we take deep dive in the subsidies new era for all the professionals. So today our topic is real catalyst to subsidies CA. CA empowering through policy and financial expertise. So friends, today we are discussing the government subsidies and policies. How can we change our practicing area? CAs are not just auditors, they are enablers of the growth. Friends, we are in a different segments and we are in a different industries. Today, the new era is thought about all the things. Just friend says that all the clients says that CAs are the auditors, CAs maintains our financial planning. So subsidies is the part of our books of accounts. Planning sessions will be accumulated with the subsidies. CAs beyond traditional loans. Roles, we know that what are the roles in this industry, but today's required some more. Don't be on taxations and all of these, but please move ahead with these subsidies also. Evolving professions. The chartered accountancy professions is evolving beyond traditional roles, adapting the dynamic need of modern businessmen. Say, friends, I'm telling about an example. If your client says, Ki, sir or ma'am, we required some finance needs, required plant and machinery about 10 CR, what are the funding options available to us? So we tell that keep go the bank and take the loans according to that. Your books of accounts and ITRs will be there. But if you are saying, Ki, sir, you take the loan from the bank and subsidies from the government, then your client says, what do you mean by the subsidies? Subsidies, basically, it's a capital grant providing by the government. And it's a really a workful, a very wonderful advisory to your client by you. So I'm telling a strategic advisory to the chartered accountants. Today, business seeks advisory. Today, the environment is there. You can give a strategic advisory to your clients. If you are saying you unlock the government benefits driving to your chartered accountancy professions. If you says that your client, sir, you have taken the government capital grant approximately 1 CR, 1.5 CR, then your client says, wow, what are the strategic advisory to us? So it's a wonderful advice to your client. Subsidy advisory, I'm telling today's environment area, central government and state government, both are the providing subsidies schemes. You know that each and everyone, it's not to be possible. But if you are in practicing industry, you please mark out that what are the subsidies help out in your industry. If you are in taxations, if you are in GST, if you are internal auditor, take them out. What are the benefits available to our client? I'm telling about the new era. How can I use subsidy that? Chartered accountants, friends, you have client screening. It means subsidy advisory means you have screening your clients. What are the clients you have? What are the industries you have? In which locations you have your clients? Mostly. What are the MSME status? Today know you that MSME's criteria is changed from the 1st April 2025. More maximum 500 CR turnover will be there. So most of the clients in MSME categories and MSMEs categories will most probably subsidies dynamic growth. So today I'm telling about these three types of things. Subsidy advisory, please maintain your clients. Subsidies, mapping your subsidies clients according to the industries, according to the business match available with your clients. Policies will be there and just only screening your client. How can I mapping with them? How can I provide the benefit to them? Then 100% your growth will be definitely. What are the potential market for you? MSME subsidy potential, high market demand. Friends, there's a significant market demand as MSME actively seek subsidies but require proper guidance to navigate the process. Friends, all of the industrialists, biggest player, small players knows that what are the benefits of MSME, but they don't have correct guidance. Correct guidance is a very good opportunities for the chartered accountants. If I'm telling about, if you have a MSME policies or clients have the MSME policy, but they don't get the guidance, they just only read out in the paper, newspapers, in the articles, or wherever where they read out the policies, but they did not get proper clearance about the policies. So please take this demand policy, take this high demand, grab it. Opportunities for all the chartered accountants in this market. Untapped opportunity. Only the few professionals are doing this in these fields. There is an untapped opportunity for the first mover to dominate the market. Friends, I'm telling that if you are practicing in some area, in India, wherever your market, so check out that who are develop these professionals industry in your area. If there is no one, please adapt it, and the opportunity of first mover in the dominate the market and rule over the market. Long term engagement. The lengthy subsidy process leads to the long term client engagement, offer the more relationship retainer the clients. Means, think about it. If your client says, my chartered accountants will give me this unwonderful subsidies thing, then your client says, yes, I have the chartered accountant who provide me strategic advice on my loan, on my finance, on my government subsidies, then they will maintain your relationship in a long term manner, because the subsidies will take long term engagement with the clients on the time of application, on the time of EC, on the time of approvals, on the time of follow-ups. All the things will communicated with your clients. Strategic positioning advantage. Think about it, friends. We are chartered accountants. So definitely we understanding the business needs. 100% a chartered accountant have a comprehensive understanding of clients' business need, enabling them to offer tailored financial advice and solution. Friends, we know that okay, what are the clients' need, what are the client required from us. So definitely, if your client says to some needs, then definitely you understand very well, because you have the long-term relationship with your clients. You have long-term review the books of accounts of your clients. So basically, you can understand the business needs of your client. Compliance expertise. Friends, we have a wonderful knowledge about the taxations, about the books of accounts, about the finance. So we have the compliance expertise. CA possesses in-depth knowledge of compliance requirement, ensuring that business adhere to government regulations effectively. Friends, if we are practicing in government subsidies, so we have expertise in the compliance, in the requirements, in the regulation, in the policies. Effectively, we can understand okay, what the policy required, what the regulations required, and what are the needs of our client. So according to our client's need, we can put on the policy, and 100% we provide the subsidies to our clients. Bridging government and industry. CA effectively bridge the gap between government demands and industry requirement, facilitating smooth operations for business. Friends, in the previous slide, I will tell you, everyone reading the policies with the newspapers, with the whatever the media they opt out. But definitely, there are some gapping between the communication, government subsidies, and the client's requirement. So please make out the bridge. We can do that, then 100% we can growth our business practice also. So it's a very good effective point कि we can effectively bridge out, and we can come up with this gap and provide the subsidies to your client. Future ready firms with their quick skill set, CA positions firm for future success, adapting to changing policies and marketing demand. Friends, a very wonderful quotes: learning, then earning. Please learn the policies, then earn more. 100% the new era of this environment, subsidies is a very good and very potential demand in this era. All the industries want that, yes, We can invest, but how can I reimbursement? How can I grants taken from the government? So definitely you can understand all the things, all the follow-ups about the subsidies, about the policies, about the loan financing, then 100% one roof, all solutions with your clients. C is economic enablers. Friends, we are a very wonderful given the roles to the economic growth. CA plays a crucial role in driving economic growth by managing finances and delivering policies benefits at the grassroots level. Friends, think about it. When someone started the business and you providing some funds from the government, then think about it. Your client's expressions, your client's vision. He says that, he or she says that you have wonderful support by the government, but it's a providing by my chartered accountant. It's a providing by my CA. So friends, it's a grassroots level. If someone helps, then 100% he remembers from all the business circle life. So please, 100% you maintain that understanding that policies, understanding and implementation subsidies. By understanding and implementing subsidies, CS help client grow and thrive in economy, ensuring their financial success. Friends, think about it. You at the right time, ki, think that ki, what do you mean by the subsidies, and Samji, what are the policies? How can I convert my clients into subsidies and all that? But think about it. When a client needs come with you, then please don't say no. We are not working in subsidies. Says, yes, sir, we are working in subsidies. Give me 2, 3 days. We are working on that. Your industries, your needs, according to that, fit the policies. Then think about it. You implement the subsidies policies to your client. So this is the very good for the chartered accountants to understanding and implementing subsidies, and also you understand your client. So basically the first and very good benefit for the chartered accountants to understanding the client's need, then they will help with their growth and also your success with your client definitely. Catalyst for the sustainable development. CA act as a catalyst ensuring effective financial management and fostering sustainable development within organizations and communities. Hey friends, I'm taking the word catalyst for sustainable development. Subsidies today's environment is a very good word, catalyst. Yes, we are working on them. 100% if your client says, sir, I'm working in this industry, and how can I grow my industry with the support of government? You says, yes, sir. By this policy, you can grow your business. Not only grow, not only for the new business, it's for existing one also. And you can transform your client business need into the real growth. 100%. Think about my whole line. Transformations your client need into the growth. Definitely, if you are putting the subsidies, if you're putting the policies, definitely your client business in a very huge transformation way, in a very dynamic way. And it's a 100% development, 100% growth of your business and also your client's business. So now we are listening about the how can I see help in the subsidies and all that. So today we are taking the deep dive in the two policies. One is a central government subsidies umbrella scheme, Pradhan Mantri Kisan Sampada Yojana. So central government provide, hey friends, I am telling about subsidies provided by the both of the government, central government and by the state government. State government providing according to the state, what my state required, which industry required more development in my state. Central government think about it for the central level. So first of all, we are taking about the first step and first deep dive into the central government subsidies umbrella scheme, Pradhan Mantri Kisan Sampada Yojana. Pradhan Mantri Kisan Sampada Yojana is basically a comprehensive package which will result in creation of modern infrastructure with efficient supply chain management from farm gate to retail outlet. It will not only provide a big boost to the growth of food processing sector in the country, but also help in providing better prices to farmers, creating huge employment opportunity, especially in the rural areas, reducing wastage of agriculture produce, increasing the process level, and enhancing the export of the product. Think about it, India is a very good industry in a food processing sectors. So Pradhan Mantri Kisan Sampada Yojana is a basically an umbrella which having more than 4 to 5 schemes under in that. That means it's provided food processing units from farmer gate to retail outlet. All the management, all the subsidies will be provided in this chain. So friends, we are making a gap, a bridge between the industry and the government policies. Understand this policy is a very good policies in the India by the central government, and the subsidies amount is a very good and very effective. The following scheme will continue under PMKSY. First is integrated cold chain and value addition infrastructure. Second, creation of infrastructure for agro processing cluster. Third one, creation and expansion of food processing and preservation capacities. Fourth one, food safety and quality assurance infrastructure, human resource and institutions resource and development, and operation greens. Now we are moving the first scheme, integrated cold chain and value infrastructure. In this policy is intended to provide integrated cold chain preservations and value additions infrastructure facilities without any break from farm gate to the consumer. This enable linking groups of producers to processors and market through a well-equipped supply chain and cold chain for the year-round availability of food products. Now you can think about what the policies available and what are the objective of the policies. But friends, see on my slide, I'm highlighting and I'm the bold, the grant amount. Grant at the rate 40% of the eligible project cost, but maximum 10 CR. Friends, is the biggest amount. If you are saying to your client, sir, if you are set up a food industry, cold chain, infrastructure provided, then sir, you have a grant 40% of eligible project cost. Think about it, your client expressions. Your client expression says, yes, sir, yes, ma'am, I will do that. 100% I will enable and I will put on the industry where and what are the procedures to take the grant. So think about it, grant at the rate 40% of eligible the project cost. Now the second one, infrastructure for agro processing cluster. Friends, cluster is a very good approach for moving the in a very good subsidies way. So there is the infrastructure provided by the central government. They are helping to the cluster also. This scheme aims at the development of modern infrastructure to encourage entrepreneurs for setting up food processing units based on cluster approach. To build modern infrastructure for setting up food processing unit closer to production areas, to provide complete preservation infrastructure facilities from farmer gate to the consumer. And one thing is a very important, to create backward and forward linkage by linking group of farmers or producers to the market through the well-equipped supply chain. Basically, this scheme is provided to the cluster so they can maintain their modern infrastructure for the food processing unit. They can preserve their food product. Perishable item can be very good for this cluster item. So they can also provide the subsidies or the grant for the backward and forward linkage also. So it's a very good and very best scheme. And the grant, friends, see the screen, 35% of the eligible project cost, but not exceeding 5 CR. Friends, think about it. If your client says ki we are investing 10 CR in this for making the cluster, and we are providing the modern infrastructure, and we are providing the linkage, and we are providing the preservation systems, then how much subsidies the available to us? Then think about it, from the 10 CR investment, you can take that the government 3.5 CR. It's a very biggest amount. And think about it. Its capital grant reduce the cost of product, increase the profit of your client. and growth of your client is a very good. So 100%, if your client grows, if with the subsidies, then 100% your growth will also definitely. So think about these subsidies. Now, third one is creation, expansion of food processing and preservations capacity. By the name, it's a very clear कि they are the scheme for the food processing and preservations. Aims to promotions of processing, preservations of agro-foods, products, and modernizations, capacity enhancement of food processing unit, especially inside mega food parks and agro-processing cluster, which help in increasing the level of processing, value addition, thereby reduction of waste. If you are apply some technology, so then the technology can improve the your product, improve the product capacity and reduce the wastage. Then think about it, the machinery technology will not help only in the growth, but also the grant will reduce the cost of product and increase the margin of your clients. The grant will be 35% of the eligible project cost, not exceeding the 10 cr. It's provided by the central government, and also this scheme will be applicable in the food processing mega food park also, and the cluster will also providing their schemes. Now, food safety and quality assurance infrastructure. Friends, we are thinking about, we are such a reading about the schemes of the modern infrastructure for the preservations, for the supply chain. One scheme is also for the food safety and quality assurance infrastructure. If you have infrastructure for your maintaining your food safety and all that, the subsidy will also be provided on this scheme also. To ensure food safety, the quality by establishing a surveillance system for monitoring the quality and composition of foods, reducing the time for analysis of sample by reducing transportations time of samples and ensuring compliance with the international and domestic standards, assist in setting up upgradation of quality control food testing laboratory. Think about it, friends. I'm reading all the things. They all are for the food quality assurance, food quality standards, for maintaining the food safety. Matlab all the laboratories, all the technologies, all the equipments which are provided, which are using by our client for this industry, for the maintaining the food safety, for the food assurance, quality assurance, then grant 50% equipment cost and 25% technical civil work. It means your client making a building, your client making any civil work, then 25% grant, and whatever the equipments will be there for all of these things, for doing all of these things, for the lab laboratories, maintaining the lab, maintaining the equipments, then 50% of the equipment cost will be provided to them. Then it's a very good, wonderful thing by the government to support all the industries. I'm taking only today food processing industry, but not only food processing industry, government provided to every industry where required. For the MSMEs, they are doing very well. Very well policies are there because due to the time, I'm taking only the two policies, one of the central and one of the state. So central will help you in a food processing. It's a very good industry, and I think so. It's a very good industry in the India at the right time. So now, human resource and institutions. Assistance is provided for setting up of skill centers to impart training and skilling on various job roles in the food processing sector, and also to conduct R&D in the technologies of process, product development, machine and equipment development. Friends, think about it. If the I'm telling about you, if your client says ki we are taking the employees so and so from this institute, from this institute, but I'm telling, if your client, if you says, sir, take lower cost employees and providing them skills training and take the grant from the government. Think about it, what the client says. It's a wonderful because the training cost will be provided to you, provided to your client. Then definitely the employment cost will be reduced. And then whatever the equipment cost will be there for these type of providing the services by your client. Think about it in the slide. a word is used, R&D, research and development. A very wonderful words, research and development in the food industry. If your client is conduct R&D also for the technology upgrade, for the technology of the process, for the product development, then 50% of equipment cost will be provided to the grant. Operations Greens. By the name, it's a very good. Definitely a scheme is provided by the government and on those perishable items. It's tomato, onion, and potato. This scheme is very wonderful by name. With a view to enhancing the value realizations of tomato, onion, potato, farmers by targeted interventions to strengthen TOP productions clusters and their FPOs and targeted interventions to strengthen TOP productions clusters and their FPOs and connecting them with the market as also to ensure price stabilizations for producers and consumers by proper production planning, reduction in post-harvest losses by creation of farm gate infrastructure and increasing in food processing capacities and value additions in TOP value chain with firm linkage with production clusters. Ethiopic, it's provided for the TOP farmers and the grant in this maximum provided 50% of eligible project cost subject to maximum 50 CR. It's a very good amount for the maintaining TOPs, tomato, onion, potatoes. Friends, in India, the three vegetables is in a very good using. So for this scheme is provided. Think about it, the grant amount 50% of eligible project cost. If you are maintaining these for the preservations, for the project harvesting loss, you maintaining the warehouses, you maintaining the cold storage for them, then 100% you will take the grant from the government. Now, this is the AND scheme from the central government provided for the food processing sector. Now we are taking, because I am from Jaipur, Rajasthan, so I am taking a Rajasthan government initiations for the Rajasthan industries. Think about it, friends. I am taking central government. So central government is for all the states. And I am taking Rajasthan government initiation because I am belonging to Rajasthan. So every state having such policies. So think about it, what the in which state you belongings. Think about it, what the policies provided by your state. Read out the policies according to the client's screening. Definitely, it will help you in your practice. So Rajasthan government is at the time of rising Rajasthan given the best policies. Rajasthan Investment Promotional Scheme 2024. It's a wonderful policy because it's a providing to the industrialist service provider, MSMEs. A policy is a bunch of buckets of the subsidies and grant. I'm taking the first slide for the manufacturing industry. Manufacturing industry, different categories are provided in these policies, but I am taking only the manufacturing industry. Manufacturing industry, there will be the eligibility. Eligibility means you are the given the investment. That means what are the cost of investments providing in the Rajasthan for the development of the industry. Investment is 50 CR, but for MSME, the limit will be 20 CR. If your client is investing in the Rajasthan at this time, if the limit is 50 CR and MSME's limit 25 CR, then the client is eligible for taking the benefit in the RIPS. The first benefit is investment subsidies. Investment subsidies means SGST reimbursement. Friends, what do you mean by the SGST reimbursement? SGST reimbursement means whatever the dues pay by the cash ledger to the government. I'm again telling what are the dues payable by your client by the cash ledger in which the composition of two taxes. One is CGST and one other of this SGST. If the composition between two CGST and SGST, then the composition of component of SGST amount reimbursement 75%. A very good demanding product investment subsidies. Friends, GST burden always taking up your clients says that how much GST applicable on my product, how can I survive in this industry. So friends, for them who sell more, who pay more, definitely investment subsidies will be benefit for them. Next one is capital subsidy. Capital subsidy is a fixed percentage of EFCI. Friends, what do you mean by the EFCI? EFCI, eligible fixed capital investment. Eligible means as per the policy, what your investment is eligible, then according to that, government will calculate your investment. Okay, how much fixed capital investment is applicable for this policy. Then according to that, there are certain percentage on which amount given to you. If says your client investment amount AFCI is 10 CR and 10 CR will be provided EFCI and percentage is approximately 13 to 18%, 28%. I'm saying 15% of my client, then 1.5 CR divided by 10. Yani, it means 15 lakh is every year your client reimbursement in the capital subsidy is a very good. Think about it, what I'm telling. These three type of subsidies which are provided in the slide. First is investment subsidy, another one is capital subsidy, and third one is turnover linked incentives. Friends, capital subsidy will be provided according to the project and area category which is provided in the policies. And turnover linked incentive says that, by the name it's a clear, fixed percentage on the net sale turnover. What's your clients? It's a very beneficial for our clients who says that we have too much billing, we have too much billing in my books of accounts, I have too much sale. So friends, it's a very good point for them. Sir, please take the benefit from the RIPs. Fixed percentage of your net sale turnover provided by the government as a grant, and same distributed in the over 10 years, and same as per the project and the area category it will be provided. And friends, the percentage amount 1.2% to 2% every year. It's a very good, it's a very wonderful scheme. And friends, the three subsidies, investment subsidies, capital subsidies, and turnover linked incentives in either or. It means three options will be available. One option is selected by your client, then definitely it's a maintaining over the life cycle of your period provided by the government. Next one is your service industry. In the Rajasthan, today's scenario, service industry, a vast area and very good development. In this right time, it's developing, but I knew it within the 2-3 years. Definitely, it's a developed industry in the Rajasthan. Service industry, for providing the service industry, government provided different categories for the RIPs is available, and same the eligibility criteria, investment in 25 CR, tourism limit more than 10 CR, but less than 100 CR, they are provided. SGST reimbursement, same. In the service industry, I knew that, and we all knew that, we are all the chartered accountant. Service industry, a bearable cost GST. So friends, if your client says that we have too much GST, we have too much billings, we have too much pay to the government. So friends, you tell them, sir, if you are investing in this Rajasthan at the time, then 100% you got SGST reimbursement 75% for 7 years. Friends, think about it. The timeline for given by the government, 7 years. That means you can take 75% of SGST reimbursement every year from the government. Whatever you pay by the cash ledger to the government, and in this component SGST, you pay the SGST component, 75% refunded to you. So think about it, it's a reimbursement. Capital subsidy, same. Service industries, if I'm telling about what are the investment in the service industry, it's a software, hardware, machineries, your infrastructure, your building, your data, your server. So that are it should be included in your EFCI. So same capital subsidy, it's a fixed percentage of eligible fixed capital investment. EFCI. Friends, in the RIPS, EFCI is a very important term for calculation of your subsidies amount. Friends, I'm telling at this time, when you apply, when you concern about the subsidies for your client, 2-3 things please keep in your mind. What the policy says, what the rules and regulations of the policies, how much benefits of your for your clients arises, and how can it process. Friends, I'm telling, how can it process? Think about it, because all the things are maintained as per the regulations. Maintaining according to the documentations, documents please maintained according to that only. Please take carefully, be carefully when you calculate the EFCI, because its whole soul depends on your client's subsidies amount. Because the policy says that your benefit amount cannot be more than EFCI. EFCI, it's maintained by books of accounts. So according to that, be carefully when at the time of calculation of EFCI. And same, it's a distributed in over the 10 year as per the same category which is provided in the policies, and the amount is 10 to 20% definitely to your client. Same thing. Third one is turnover linked incentive. As per the ceiling limits, same fixed percentage of the net sale turnover, same distributes in the over 10 year as per the project category and area category, and the percentage will be 1% to 1.4%. Same, the three options will be available for either or. Now I am telling about MSME categories. Friends, in the Rajasthan, MSME industry is a very vast industry. 500 CR turnover will be included in the MSMEs category. So today, MSME categories are very wonderful working in the Rajasthan, and for our chartered accountants, for our professionals is also a wonderful area for practicing in a new scenario. MSME, total incentive for MSME capped at 5 CR annually. Friends, for the MSME, they capped total benefit cannot be more than 5 CR annually. In the year, you can only capped with the 5 CR. It means whatever the subsidies in whatever the format provided to their client, sum up 5 CR annually. Same investment subsidies, SGST reimbursement, 75% for the 10 years. Friends, capital subsidies for MSMEs provided only in the two industries. Yes, only in the two industries, the capital subsidies will be available. Alternative of plastic products, 50% of capital investment, maximum 40 lakh rupees. Alternative of plastic product means, says one of my client is investment in Rajasthan, Jaipur. He will make chopper board. Chopper board is made. If I'm telling about the before the this industry, chopper board is made up from the plastic product, but he invented, he made up from the wooden chopper board. It's making by them, not only sold out in Rajasthan, all over the India, but global level, he having too much market. So friends, this is a new idea. According to the policy, share your ideas with your clients who are the investors. 100% if they like the idea, they can suggest you, they can provide the all the compliances. So please make my company and we will invest in this industry. So go ahead. So friends, think about it. You have the new area. You can apply for them also. You can sum up with all the works, either registrations, either working, either GST returns, either income tax return, either compliances, either subsidy, either financing. It means all the solutions for your client under the one roof. And second one is agro and food processing. Friends, in the previous slides, we are talking about the central government subsidies. And we are in this slide, we are taking the central not, but the state government subsidies providing in the Rajasthan. Agro and food processing, 50% of the capital investment, maximum 1.5 CR. It's a very good. I'm telling, if some of your client in Rajasthan and investment in the food and agro industry, you tell them invest only in 3 CR, 3.5 CR, 4 CR. You can take 1.5 CR from the government. It's a wonderful opportunity, and not only the capital subsidy, you can take another subsidies also, and wonderful subsidies for the food and agro industry. And one thing in also, 5% additional capacity and additional capital subsidies for FPOs owned by SC/ST women and units in areas tribal. Friends, think about it. If your client maintaining that, sir, I'm starting my business in my name, suggest them, no sir, you don't done your in your name, you done in your wife name. So your client says, "What's the benefit if I'm taking the name in my books of accounts of my wife?" You says that, "Sir, additional 5% capital subsidy provided to your wife name." So it's a strategic advisory. I'm telling in the previous slide, maintaining your strategic advice to your client, then definitely you can earn. If you learn, you can earn also. Definitely you earn. And the special incentives, the very biggest incentives you can read out also in this slide. Reimbursement of 50% of the employer contributions toward the EPF and ESI for the 7 years for the domiciled employees only. Think about it, friends. I'm telling 50% of the employer contributions. If someone have employees like I'm telling about the resort industry and hotel industry, in which a very big contributions are out the employee contributions. Wonderful benefit given to them. Apply them reimbursement. You tell them, so why you are not taking the benefit of all these things? If you are taking, then all the growth and all the sale, all the revenue, all these things are growing up. Friends, is a wonderful benefit provided by the Rajasthan government to the Rajasthan industrialist. If you are investing in a new plant and machinery, equipments, or apparatus, interest subventions per year. Think about it. If your client investment in the plant and machinery up to 5 CR, then interest subvention 6%, 5 to 10 CR 4%, 10 CR to 50 CR it's a 3%. Friends, think about it. Your client taken 5 CR loan for the plant and machinery, and the bank loan gives in only today's scenario after the down rates 8.7, 8.6, 8.9, 9% maximum. Effectively interest rate will be provided is 3%. Friends, is an awesome benefit. Please mark that it's an awesome benefit provided by the Rajasthan government to their industrialists. 6% interest subvention is a very biggest amount for the industrialist, which is investment 5 CR, and plant and machinery 5 CR, more than enough. If someone is investing 5 CR, it's enough amount. So friends, it's a very good investment at the time of in the Rajasthan industries. 6% interest subvention is not a lower value, it's a biggest value in this industries. And think about it. If you are not suggested, someone is suggested to your client, "Sir, you are taking the loan, but you are not taking the subsidies. You are not taking the interest subvention." Then your clients think about it. My chartered accountant will not tell me. What is this amount? Then think about it. What is the impression in the client's mind? Exactly, I'm telling. You can say is that, "Sir, I'm not working in this field area." But friends, you are not working, but you can understand the policies. You can you can come out with a gap. Think about it. Communication skills develops, and you can also earn more. Think about it, the benefits are more and interesting benefits by the Rajasthan government. Thank you. Thank you so much. If anyone have questions, please ask
Thank
me.
you, Sonamji, for such an insightful session. Uh, I guess a lot of chartered accountants will benefit from this, and from this upcoming area. We do have a couple of questions. I'll just quickly go ahead. Uh, Ma'am, setting up of food processing units based on cluster approach. Can you explain the process of cluster approach?
Uh, who asked the questions? What a good name?
This is from Thunamala from Hyderabad.
Hyderabad.
Yeah.
Please give me on the CP committee. I will provide the whole approach because it's a biggest approach and
Vast
a
approach.
long lengthy approach.
Okay, perfect. So Thunamala, maybe you can share your question on to the CP committee. Yeah. Next question is, a large scale running industry wants to install new unit with investment of less than 50 crore project cost. Then benefit of RIPS 2024 is available to industry onward.
Please pardon the questions. Where
Uh,
is the unit?
uh, the unit is not like prescribed, but I guess it's from Jaipur, so I'm assuming it would be in Rajasthan somewhere.
RIPS 2024 is actually the fact of questions is not there. So
Mhm.
I'm just telling that if the industry is investing in at the time of Rajasthan in this at the time. So RIPS 2024 is available to the food and agro industry also. And
Okay, okay.
where the industry is set up and what the exactly investment amount and what are the category and what are the project category and what are the basically substitute and output, what are the making them, and according to that we are providing the what is the exactly approach for taking the benefit of RIPS 2024.
Correct. All right. Uh, is there any website to check all the state subsidies schemes on a single time basis, or is there any report on consolidation basis where individual states provided these many subsidy schemes to the central government so that anyone can check subsidy schemes provided by individual states?
Friends, exactly, I'm working on that. Exact in the right time, I will make a website on that. It's my company website. I'm the founder of this company, apnesubsidy.com. You just Google on apnesubsidy.com and you can go on the government scheme chatbot and some credentials are there. You put on that and all the 18 policies at the time of Rising Rajasthan provided by the government, all the policies are mentioned there. All the chatbots are there. You just put on your query and all the answers will be provided by the chatbot automatically. 24/7 in Rajasthan is available. For the Rajasthan policies only, I'm working on central government also. Is still in under development conditions. So if the Rajasthan is, if you are searching about the Rajasthan policies, go on the website.
All right. I guess that was all on the questions front, and I guess we're right on the time. So thank you so much. Thank you so much, Sona ma'am, for taking the session, addressing the questions, and the insightful session that you had. Thank you, Vikas sir, so much for taking the session on the ISD. Uh, to all the participants, if you have any questions related to the session, you can mail it to the CP committee, and we'll be more than happy to answer that question on the email.
Yeah, I'm also more than happy if someone is query to
Yeah,
me. I'm always
yeah,
happy
yeah.
to answer the queries.
All right, all right. So I guess this was it on the session. Thank you everyone for joining in and have a good day. Thank
Thank
you.
you.
Thanks. Hello? Yes, sir. Yes, we can hear you.
जी बादल जी